Why did the 2008 housing crisis have such a significant impact on the global economy? This was no ordinary downturn. It was a catastrophic event that rocked the world, shaking the very foundations of financial stability. It was a time of uncertainty and fear, leading to sweeping changes in policies and regulations. The scale of this crisis was global, affecting nations far and wide, and its repercussions are still felt today. Let's dive deep into the events that led to this economic disaster. The roots of the 2008 housing crisis can be traced back to unscrupulous lending and the reselling of mortgage-backed securities. To understand the genesis of the crisis, we must first delve into the murky world of subprime mortgages. These are loans given to borrowers with poor credit histories, often at higher interest rates to compensate for the increased risk. In the years leading up to 2008, the financial market was awash with these risky loans. Lenders eager to cash in on the booming housing market were all too willing to turn a blind eye to the potential dangers. This leads us to mortgage-backed securities, complex financial products which played a key role in the crisis. Essentially, these are bundles of mortgages that are sold to investors. The idea was that by diversifying the risk among many different loans, the potential for losses would be minimized. However, when the housing market took a nosedive, so too did the value of these securities. In the midst of this financial maelstrom, two names stand out: Fannie Mae and Freddie Mac. These government-sponsored enterprises were responsible for buying up a significant portion of these mortgage-backed securities, effectively underwriting the risky loans being handed out by lenders. When the crisis hit, they were left holding the bag. The government was forced to bail them out, placing them under the conservatorship of the Federal Housing Finance Agency. This risky financial behavior set the stage for an economic downturn of massive proportions. It was a perfect storm of questionable lending practices, financial engineering gone awry, and a lack of effective regulation. The consequences were far-reaching, resulting in the most significant economic downturn since the Great Depression. But, as we'll see in our next segment, from the ashes of this crisis came some important lessons and new approaches to financial regulation aimed at preventing a repeat of 2008's devastating events. The aftermath of the crisis was a period of intense economic struggle, leading to the most significant economic downturn since the Great Depression. In the wake of the 2008 financial crisis, the world found itself in the throes of the Great Recession, a period of economic contraction that had devastating effects on global markets. The crisis was a stark reminder of the need for robust financial oversight and regulation. To mitigate the effects of the crisis and prevent a recurrence, new oversight agencies were created and existing ones bolstered. The Troubled Asset Relief Program, or TARP, was one of the key measures implemented. This program aimed to stabilize the financial system by purchasing mortgage-backed securities and bank stocks. In addition, the creation of the Financial Stability Oversight Council, or FSOC, and the Consumer Financial Protection Bureau, or CFPB, provided much-needed oversight to the financial sector. These agencies were instrumental in identifying risks to the financial stability of the United States and protecting consumers from unscrupulous financial practices. Legislation, too, played a pivotal role in the aftermath of the crisis. The Dodd-Frank Act was passed to prevent another crisis, requiring banks to undergo stress tests and reduce risky bets. The Volcker Rule, too, was enacted with the aim of prohibiting banks from engaging in risky proprietary trading, although its potency was somewhat diminished in 2018. Banks, for their part, raised their capital requirements and reduced their exposure to subprime mortgages, risky loans that were at the heart of the crisis. These moves were aimed at creating a buffer against potential losses and reducing the likelihood of another crisis. These measures were taken to stabilize the financial system and prevent a similar crisis in the future. They underscore the importance of vigilance, regulation, and prudent financial practices in maintaining economic stability. While the crisis was a painful period, it also served as a crucial learning experience and a catalyst for change in the world of finance. These measures were taken to stabilize the financial system and prevent a similar crisis in the future. The 2008 financial crisis provided valuable lessons that have shaped economic policies and strategies in the following years. One of the most notable rebounds has been the significant growth of the S&P 500 since 2009. This growth was spurred by lower interest rates, the implementation of quantitative easing, and the rise of the FANG stocks, that is, Facebook, Amazon, Apple, Netflix, and Google. These tech giants have become major players in the global economy, driving market trends and influencing investment strategies. Furthermore, the lessons from the 2008 crisis have not been forgotten. They were revisited during the COVID-19 pandemic, guiding the financial measures implemented to support the economy during this unprecedented crisis. This highlights the importance of learning from past experiences to navigate future challenges. Another notable development since 2008 has been the popularity gain of exchange-traded funds, or ETFs. These investment funds traded on stock exchanges have become a preferred choice for many investors, offering diversification and ease of trading. While the world has moved forward from the 2008 crisis, the lessons learned continue to influence financial decisions and policies. The crisis underscored the importance of prudent lending, robust oversight, and the need for constant vigilance to prevent another financial disaster. It showed us that with resilience and the right strategies, we can weather economic storms and emerge stronger and wiser. If you found this video informative and want to stay updated with home-related content, don't forget to like this video and subscribe to our channel.